So aside from interest rates and lending policy, what's important to a medical professional when it comes to loan structuring?
In essence, Jesse, you get two types of loan facilities. You get a basic home loan product with a redraw facility, or you get a packaged product with an offset facility.
Okay, so you mentioned offset. What does that actually mean?
So what it is a fully functional transaction account that sits alongside the loan. And in essence, you can use it as an everyday banking facility, but every dollar that you have in that offsets against the loan balance, and you're saving interest every day. So for example, Jesse, you might have a loan facility with a balance of say 500,000, they've got 250,000 in the offset. So in essence, you're only paying interest on the $250,000. So it's netting off against the loan balance.
So what benefits to a medical professional would there be structuring a loan like this long term?
So really, if you think about it, medical professionals buy their first home quite young, but it's not their forever home. So they seem to want to buy properties every couple of years, and that's as their income increases. So what happens is if they had bought a property without an offset facility and they've paid down into a redraw and the loan balance sits at $250,000 and they want to then go and buy another property, there's a very different treatment to if they had done it in an offset facility. So let's look at that example then. So let's say they've put it into an offset facility. So they've got $250,000 sitting there. They've still got a $500,000 loan sitting there. They take that money out, they go and use it to buy another property, and they still have, from a tax perspective, because they're renting out this property now, a $500,000 loan balance. If they put it into redraw, they'd paid it down to $250,000, they could then still redraw that money and go and buy another owner-occupied home. But from a tax perspective, only $250,000 is therefore tax deductible. So that's where the difference is. So if you've set it up incorrectly from day one, you really are impacting your tax efficiencies into the future.
So it sounds like there are some complexities when it comes to getting the right loan structure. How can Avan assist you?
Well, the first thing is I always say to people is they need to have a really good accountant, and then they need to have a really great lender. And that's what Avant is. So we work very closely with the accountants and we make sure that the loan structures, the cost of the facilities, tax deductibility, etc., is all in line with what their accountant wants.
So if someone wanted to get in contact to discuss a specific scenario, how would they go about that?
So you just scan the QR code at the end of this video, fill in your details. One of our relationship directors will get back to you soon.
Perfect. Thanks, Jacqui.
Thank you very much.